we're going to be discussing what happens at the end of an interest-only buy-to-let mortgage. Stay tuned to find out more. Hello and welcome back to our channel and podcast. My name's Gemma and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifthi joining us once again. For those of you who don't know Ifthi is a trained accountant and mortgage broker who's been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifthi.
Hi, Gemma. How are you doing today?
Yeah, good, thanks. How are you?
I'm well, thank you.
Good. Right, today we are talking about what happens at the end of an interest-only buy-to-let mortgage. So let's get into it. What is an interest-only mortgage?
Okay. A lot of the time you see repayment mortgages, which is capital plus interest. That's very common in residential mortgages. So if somebody takes a residential mortgage, they pay the loan as they go. Plus for borrowing the money from the bank, they do pay some interest. But whereas an interest-only mortgage is where you don't pay the capital element. So if you borrowed 100,000, for example, at the end of the term, your loan outstanding will still be 100,000. So that's the difference. So you only keep paying the interest, you don't pay off the capital. So it's common in the buy-to-let space, whereas the repayment mortgages are very, very common in the residential space, yes.
Right, so then why is an interest-only mortgage so popular with buy-to-let properties?
Okay, for two main reasons, right? Because buy-to-let properties are mainly done by investors. So they look at cash flow, right? So if you have a repayment mortgage, let's say you're paying £500 interest and £500 capital, that £500 capital you won't be paying anymore, right? So you're only paying £500 to the bank. So if you're paying 500 and let's say you make a rent of say 1,200, right? So your cash inflow is £700. So cash wise you have £700 in hand compared to £200 in the previous example. So that helps the investors retain that money and potentially buy another property in future because they're investors, right? So that is one of the main reasons why people do that. It's for cash flow. And the second main reason why interest-only ones are popular is if you go to a bank, for most banks, not every bank, but most banks, if you are on a repayment buy-to-let mortgage, they don't offer as much as they would with a interest-only mortgage because obviously the bank realizes, if you use the same example as before, that they have to pay £1,000, right? So it's a higher risk. Whereas if the person is paying £500 instead, that's a lower risk from a bank's point of view because they know there won't be a negative cash flow that easily. So, that gives them that comforting factor, right? So therefore they love to borrow a little bit more. So these are the two main reasons why people will do a buy-to-let mortgage with interest only.
Yeah, sure. So then, okay, let's talk about the drawbacks now. What are the drawbacks then of an interest-only mortgage?
Okay, so the biggest drawback of an interest-only mortgage is your balance don't come down, right? So let's say you borrowed 100,000 and let's say you took it over 25 years. You may keep changing lenders, but your balance don't come down. The balance is always going to be 100,000. So at the end of the 25th year, you need to settle 100,000, right? So that is sort of the biggest drawback of an interest-only mortgage. The other thing is because you don't pay up your mortgage, your loan to value or the amount of borrowing, because it's remaining stagnant all the time, you may not have the best products all the time because people who have a 25% deposit, if they are on a repayment mortgage, that 25% can automatically go down to about 30 after 2 years, maybe 35 after 2 years. That doesn't happen, right? So therefore, your chances of getting into a cheaper product, your chances are less, right? Because obviously you're only expecting the house price to go up to get that number. Otherwise, automatically you don't pay anything and your balance don't keep coming down, right? So those are the two main drawbacks you find in an interest-only mortgage.
Thanks, Ifthi. So then going to sort of the end, what happens at the end of the term of a buy-to-let mortgage then?
So if you are on a buy-to-let interest-only mortgage, the biggest problem you have is you got a massive balance, right? Which has never come down. So let's say you took a 25-year mortgage. You probably were young at that time when you took it because you were 25 years younger, right? So 25 years later, when you come, you got that balance to settle, right? So bank will say, okay, your mortgage term is now over. Can you please settle the balance, right? So a lot of people will struggle at that point, right? Because, they may not have savings, right, to pay off that loan to the bank. So they may have to sell the property and settle the loan. So that's probably the problem. So you need to really plan for these things. Otherwise, you might end up in that situation and you might be desperate and you might even sell it at a slight loss, right? So you have to be a little careful.
Yeah, definitely. And so is there anything you can do then to avoid having those kinds of issues at the end?
I think I always tell people, plan this in advance, right? Yes, 25 years is a long way from now if you're taking a 25-year mortgage, but that will come. So you got to plan in advance. A lot of people I work with, this requires financial advice, and I strongly suggest you speak to a financial advisor on this area. But I'll tell you what people generally do, right? So on the side, they have pensions, right? So they build up their pension pot. That's one strategy they have. So come end of the term, they will use that pension money to settle off the mortgage, right? So that's something that you can do. And there is some good news from some of the banks as well, because we are seeing some of these cases coming up now. They have extended the terms, right? So in the past, most banks will give you a mortgage up to the age of 70. But I can see that banks are moving from 75 to 80 as well now, right? So that gives you a little bit more breathing space. So, if you are coming towards the tail end of the mortgage, that might be an option for you to look at from a planning point of view. And also look at, this is where planning is very important, right? Look at what your ultimate aim is, right? So if your aim is to have properties and pass it on to the next generation, maybe it's an idea to set it up through a company, right? So if you set up through a company, maybe gradually you can transfer the shares across to your kids who can run the company in the future. And that way you don't necessarily have to sell the property because it's a company and the property is owned by the company and there is continuity there, right? So you might be able to mitigate this problem. But these are some solutions that I've seen my clients using. But like I said, this requires financial advice, right? I've only given you some examples. It's probably best to talk to an advisor. I mean, WS has financial advice as well. So we are more than happy to provide you those advice if you need it. So it's always good to plan this in advance.
Definitely. And then the last question that I have today for you, Ifthi, is, people talk to us about getting a buy-to-let for retirement. And I was just wondering if you could explain to people what that would be.
Yeah, so I see some people telling me they don't believe in pensions, right? And their retirement plan is buy-to-let properties. Again, they have their reasons for that, right? But if you are using it as sort of a retirement plan, just make sure that you plan this properly as well, right? Because let's say you build a small portfolio. What you don't want to do is sell all the properties at the same time because you might end up with a massive tax bill if you try to do that, right? So again, you got to plan this. So a lot of people, what they will do is towards the tail end of your mortgages, they will start selling property by property. So that way, you might be able to reduce your tax bill, right? So some people also, like I said, set up a company, buy through that. So then during their retirement, they can enjoy the rental that comes through that, right? Because that will be their income. And obviously after them, they can pass the properties on to the children, right? So that is more the common practice because that's what a lot of people want to do. They want to enjoy it as long as they can, but after them, they want to pass it down to the children. But like I said, you probably want to look at the company option if you are looking at that, because obviously inheritance might come into play, right? So there is a lot of things that you have to consider. That's why I say you always need planning with this area. A lot of people just jump into it saying, I just want to do a buy-to-let, right? Yeah, you do, but have you planned what's going to happen next, right? What about your inheritance? Inheritance is sitting at 40%, right? A lot of people don't realize that. So, obviously you're not there to sort it out and sometimes too late for you to sort it out as well, right? So you probably want to plan those now, right? But yeah, a lot of people use this as a retirement tool, right?
Well, thanks again, Ifthi, for some more great advice. I just wanted to put our regular reminder out there that these points may or may not be applicable to everybody. So please do contact an advisor if you're unsure if they're suitable for you. If you would like our advice, financial advice or mortgage advice, please do feel free to contact us. We are more than happy to help. And another little reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.